Welcome, savvy investors and business enthusiasts. Today, we dive into the dynamic world of real estate investment trusts, or REITs. These investment vehicles with a focus on real estate offer a unique blend of income generation and capital appreciation. They are important players in the investment world, serving as a bridge between real estate and capital markets. Now let's shift our focus to two prominent names in the REIT landscape: Camden Property Trust and Mid-America Apartment Communities. Both have made a mark in the Sunbelt regions, known for their fast-growing markets. These companies have been absorbing new apartment supply well, maintaining high occupancy rates, and giving each other stiff competition. The intriguing question is, which of these REITs presents a better investment opportunity? Are you ready to explore which of these REITs might be the better investment option? Stay with us. Camden Property Trust and Mid-America Apartment Communities, two giants in the Sunbelt apartment REIT space. These are the two largest players in this region, both boasting portfolios in fast-growing Sunbelt markets. Let's start with Mid-America Apartment Communities, also known as MAA. MAA's portfolio is larger, making it a more pure-play Sunbelt REIT. This means that it focuses almost exclusively on the Sunbelt region, which is a huge plus for those bullish on this area. MAA's balance sheet and occupancy ratios are commendable, reflecting its strong position in the market. On the other side, we have Camden Property Trust, or CPT. CPT's portfolio may not be as large as MAA's, but it holds its own with a strong balance sheet and similar occupancy ratios. What sets CPT apart is its exposure to California and Washington, D.C. This diverse exposure may be preferable for those who are looking for a balanced view of Sunbelt and coastal market growth prospects. Historically speaking, MAA has outperformed CPT on a total return basis over the last decade. However, this was largely due to starting valuation differences. Today, both REITs stand on similar grounds in terms of valuations, hinting at similar expected returns in the foreseeable future. But as we all know, past performance is not always indicative of future results. The question remains, which of these REITs holds more promise for the future? Is it MAA with its pure-play Sunbelt exposure and larger portfolio? Or is it CPT with its diversified market exposure? Both these REITs have similar valuations and are expected to have similar returns going forward. But is there more to it? Let's find out. The COVID-19 pandemic has reshuffled populations and impacted the REIT's landscape significantly. It has been a game of musical chairs in the real estate world, with people moving from densely populated coastal cities to the more affordable and spacious Sunbelt regions. This shift has had a ripple effect on the multifamily real estate investment trusts, or REITs, that have traditionally dominated these coastal cities. Before the pandemic, coastal apartments were the darlings of REITs. However, the pandemic-induced exodus to the Sunbelt has narrowed the valuation gap between coastal and Sunbelt landlords. This reshuffling has brought the Sunbelt markets to the forefront, with high occupancy rates and a competitive landscape dominated by new apartments. Now let's turn our attention to the two largest players in the Sunbelt apartment REIT space, the Camden Property Trust and Mid-America Apartment Communities. Both have portfolios in these fast-growing Sunbelt markets. Mid-America Apartment Communities, with its larger portfolio, is a more pure-play Sunbelt REIT. Camden Property Trust, on the other hand, offers exposure to California and Washington, D.C., making it a balanced option for those who still see potential in coastal cities. The pandemic has not only changed where people live, but also how REITs perform. Mid-America Apartment Communities has outperformed Camden Property Trust over the last decade, thanks to its more focused Sunbelt exposure. However, with the pandemic shaking things up, both REITs now present similar valuations and expected returns. So how does this shift affect our investment decision? Let's delve deeper. With similar valuations and expected returns, the choice between Camden Property Trust and Mid-America Apartment Communities is not an easy one. In the grand scheme of investing, the devil is often in the details. Both companies share high occupancy rates and balance sheets, which can make the decision between the two somewhat challenging. However, there are unique attributes to each that could potentially tip the scale in their favor, depending on your investment strategy and market vision. Camden Property Trust, for instance, has a broadened exposure, stretching its influence to California and Washington, D.C. This geographical spread might be an attractive feature for those investors who are looking for a balanced view of both Sunbelt and coastal market growth prospects. On the other hand, Mid-America Apartment Communities has taken a more focused approach. Their portfolio is primarily concentrated in the Sunbelt region, making them a pure-play Sunbelt REIT. For those who are highly optimistic about the Sunbelt market, this could be a more appealing option. Both companies have proven to be strong players in the REIT space, and their performances have been nothing short of impressive. But as we've mentioned, the choice between the two is not black and white. It's a decision that requires a careful examination of your investment strategy, your risk tolerance, and your perspective on the future of the Sunbelt and coastal markets. The choice, ultimately, depends on your investment strategy and your view of the Sunbelt and coastal market growth prospects. So, there you have it, a comprehensive comparison of Camden Property Trust and Mid-America apartment communities. We've delved into the intriguing world of REITs, looked at the unique strengths of both companies, and examined the impact of the pandemic on their performance. In the final analysis, both REITs have demonstrated resilience and adaptability in the face of change. With high occupancy rates and growing markets, they present attractive investment opportunities. Camden's exposure to both coastal and Sunbelt markets may appeal to those with a balanced outlook, while Mid-America's almost exclusive focus on the Sunbelt could be the ticket for those betting big on these emerging markets. Let's not forget that investing is a journey, not a destination. It's about finding the opportunities that align with your strategy and market outlook. Both Camden Property Trust and Mid-America apartment communities have shown that they can be part of a winning strategy. Remember, investing is not a one-size-fits-all approach. It requires careful consideration and strategic planning. Subscribe to our channel for more informative videos to help you make the best investment decisions. Until next time, stay savvy.